Good morning, guys. Good morning, guys. Can you hear me? This is a sound check. Hello, Bruce. Hello, Janet. Do you see a chart, or do you see what do you see on the screen at the moment? A chart. All right, guys. Okay. Good morning. Good morning, Debashis. I hope your family in India is all right now. I just heard the news that India is very bad hit, but also India is the biggest producer of vaccines. So I really hope you cope with that. Don't trade if you're too emotional due to family or due to. I'll just put up this screen. You see, your system determines your success. It is the account that I have been trading for you guys. Today, I'm just gonna spend a few minutes to show you all the trades on that account and how I grew it in this pretty fast pace, just 1 month to double that account. Oh, I'm glad to hear your family is okay, the bashes. Great, good. But normally when you have death in the family, I experienced a few deaths last year. I normally take, it depends on how close they are, but maybe take a few days off or maybe a week off, do something else. If you're very emotional, you really have to keep those emotional out of your trading. So in trading is a lot to build confidence. There's a lot about to build your confidence. Okay, I just want to go over how we grew this account from 50 to 30 in those 5 weeks here. So I have a specific target on each trade. This is $100 on each trade, and I try to aim 1K a day when I do trading. But it's not possible every day. You should not hunt for the trades. You should not just go for the trades just to trade. You should only pick very safe trades where you can spot the setup and where you have a good belief in that this trade is doing the right thing. So you cannot go for like 1K a day. You have to go for the weekly target or for the monthly target. But to make this is something you have to do. You have to decide exactly how much you're going for at one specific trade. So that is important. Then when you trade for companies like prop firms and investors, they're looking very much at the drawdown here. This is not at all a normal drawdown. You will expect drawdown for up to 20% of drawdown. So this is just because I'm very disciplined and I'm going very, you will see what I do later on, but it's not, I don't take a lot of risk. So really, investors will look at this. If you want to trade other people's money, they will look at a lot of this. So this is exceptional. This is really exceptional, guys. So if you show a track record like this, you will have investors you can trade the money from for them. All right, we'll just go into the trade. I took 140 trade. I was above 90%. I will go and tell you about the loss, why I have this 5 losses here, and why I have this big loss, and why our average is losing this amount. So I'll go into what I have done wrong. Some of the things I have done wrong on purpose, just to show you a point. It was in the beginning where we started trading. I was just showing you, but let me go to the track record now so you can see exactly what's going on. I'll just bring the first statement on here. Let's see if you can see somewhere. All right, so this is how the account looks. At the April 21st, I closed the account for a 50K gain. It was this. So last Wednesday, I closed it for this amount. Okay, so you can see here, usually I trade the pound here. Then I trade some volatile pairs. Gold is something I specialized in, so I have a special gold account. And but basically the sterling basket, and I would like to show you here is this one. This is something that was just 1 week before. It was on the 15th of March, and we started on the 23rd. We started the 23rd growing the account together. So this was just to grow the account up to 15,000. Okay, so before I will just show you what is going to happen. It was an Australian New Zealand dollar. I took a sell for one standard lot here. You see, this, I didn't use any stop loss. So that was my first mistake. But for this particular one, because I knew it would be a seller later on. So I took the sell, even though it was at a low point. There was no need for me to do it, but I only did it for one purpose only, and that was to show you this. This is swap. This is when you have taken a wrong trade and you just write the trades for day, a lot of days, and you're in some kind of you have to pay every time a new day begins. So that depends on your broker. So I was in this trade for a long, long time. I knew it would come back, I knew so it was a positive trade. But because I was in it so long time, so the brokers earned a lot of money on me. So this is how much the brokers earn on me. And this is, I could close it out for a win. So it's just to show you, if you're staying in a trade a long time, even though you're a winner, you can lose it because of the broker that take a lot of time when we go into the next day. So I have to keep this off, because otherwise I would be stopped out. So it was a trade, it was a winning trade, but I was nervous. I was sitting in for a long time, and this is something you have to avoid. So it was just too plain to show you that it's possible that the price would go back and you would close out as a winner, but you don't have to put yourself in stress, and you don't have to pay the brokers a lot of money here. So I recommend you not to do that. So that was the first loss. You can see it here. It was, let me see. So that minus that is the 300. So that's a 301. So that's a big loss here. And it was only because of the swap, because I was sitting in a trade for many, many days. So I do not recommend that, guys. All right, so we can just tag along here. You see there's a lot of winners. There's only winners here. That was the first. Let me see. Yeah, but a lot of sterling. I'll go to the next one here. Next one is this one. So here you have the 500 in gold. Continue down here. What is okay? You can see those are losses here. This was just a plain false guess. It was a false guess. I was not completely right on my entry, so that was a mistake. It was a solid mistake, and it was something like I was doing the wrong thing here. So that was my mistake. So you see here, because I'm not very sure, I go in with a small lot, only 3 minutes here, and I have a stop loss in place. So when the trade goes bad on me, I will only be stopped out for this amount here. So if you're not very sure about the trades, go in with a small amount here. If you're very sure, you can go in big like this. So those trades here, I was very sure, and it was just close out the same day for a lot of profit here. So what you have when you're beginning, you always have to use stop loss. Today I just showing you an example of what you have to be mindful of. Okay. So the next one here is still the same. It's Australian, New Zealand, that one again. And I have a stop loss in position. I go for 5 minutes. So I was taking this trade very late in the evening. That's another mistake. I took it just when it go to the new day, when you have the close of the day. So that is a bad day, bad time. That was bad timing, this trade here. we have the gaps in the when we roll over to the next day. So I have the rollover fee here, and we have the gap. So I stopped out with a small loss. I was using a very tight stop loss because it was just impossible. It was in a bad timing, this trade here. So you have to be mindful about the timing of the trade. You have to be mindful about only go in with small sizes if you're not actually sure about the trade. You can go in with very big size if you're sure that it would go your way. But always put stop loss on it. Okay, the next one. Right here, the next one. Yeah, let's see, that was this. This was the third loss, fourth loss. You see that the same mistake here. I still have my stop loss in, so that was okay. I took a small trade. I was in the trade overnight, just for a couple of days. And even though it was positive, because I take the trade overnight and hold on to the trade, my swap actually drove the position down. So this would be a negative 10. So that's a small loss there. So if you take a trade for many, many days, just sure that you'll close out in a lot bigger profit than the spread. So that was another lose there. That was plain stupid one. This one, that was I read the entries totally wrong. So that was entirely bad reading of the chart. This one, 131. That was a plain mistake here. But you can see if you go in with a big volume here, you can earn $100 on each trade. Our average about that. So to pull that up, I would trade volatile instrument like gold, 300, 400 in one trade. It was a standard lot, just trading standard lot. If it's possible for you, we have a trading strategy to trade gold together. Gold is a very good way to grow fast because it's so volatile. And also the sterling basket is also volatile. I'll show you a little later on. I'll show you how we can measure the volatility on the currency pairs, and you can trade them. So I pick the pound to grow fast. So we still have this Australian. And you see, I still have to keep it overnight. But this was good because it was a good profit here. So it's actually many times it can be good to keep it overnight. Just make sure that your gain is larger than the broker's profit by the swap. Okay, I hope that makes sense. Let's take the last one. Let's see, yeah, should be the last one. It's this one. So we have the big gain in gold over there, 1K a day. Just trading with a stop loss. Kept it for a couple of days. You can keep it for a couple of days if you know direction. So you see that this is just very good trading here. So that was just 5 days of trading here, 5K. So you need to pick very valid trades to take in, So, but you can see the last one was just beautiful gold and Canadian in the pound here. So I hope that makes a lot of sense, and I have explained why I have this kind of drawdown. I explained why I have this very big loss here. It was due to I kept on to my trades for such a long time, and it was going in the wrong way, and I was not closing my trade out. So that big move was actually just to show you a point here. The other I made 2 mistakes, and the other one was another swap. So I took a couple of bad trades, not reading the interest very well. So that is me being totally plain and honest to you of what's going on here. So I hope you learn a lot from this. I hope this is, you can see we are all humans here. We can still hold on to a trade, but it's a bad thing. So you should just close it out before it will ruin your account. So never do something like that. You can make bad mistakes for like the couple of trades where I saw you or showed you, where you just read it wrong. That is totally normal. But the next couple of weeks, you should be above 70% on your win trades. I imagine you should at least be above 70% in your winning trades, you know. And I will show you a routine how to do that. Okay, but before we go into the routine, I will just show you this the volatility tool. Let me see. So this is the volatility tools. We are MATAF net tools volatility. Then this one will pop up. It will pop up. You push in here 2 weeks or 3 weeks if you turn longer. If you trade for a longer term, like for a month, you have to put in like 10 weeks or 8 weeks here. And then it will calculate the average pips in 1 day. And you can select, if you like to select the most volatile pairs, you can just pick the top one. Those are the most volatile. And you can just decide, okay, I want to trade like a volatile pair that will move above maybe 70 pips in a day. Then I will have a couple of trades, you know, where I know it would run for like 35. But I go for those. I go for this. See, 1, 2, 3, 4, 5. We got like 5, 6. We almost got all the sterling basket in here in the top 15, you know. Then we got the euro GBP down here somewhere. So that's not very good. But all those pairs are commodity pairs. Very good. So you just pick the most volatile ones, select that in your basket, in the portfolio if you like to do that. And then you can go over here. This one is a beautiful one. You know, it's take out the whole day, you know, it's plan out the whole day. So we trade our trading time. Just let me see. Shit. All right, wrong. Hang on. So you see here, this is the New York session. Those are the 3 hours we need to trade. So you can see the last hour of the equity hours. We have the equity hours around here. Last hour, this pair is actually excellent to look at, because very often it will make the best trades here. It will be most volatile here just after the equity hour in New York. So you can just go in and play with this tool. You can select when you have the time. When you are able to trading, you know, you should not trade all day. You should just select the best time for you. And then you can go in and say, okay, I can trade, you know, I can trade in the evening, 9 o'clock in the evening. But this one is not a good pair. Then you should select another one. So you can use this in a very good way to time your trades. Trading is all about timing. So it's very possible that this pair will trade a lot because it has done that the last 2 weeks. So it has been trading the most here. It's been more volatile here. So that's a good pair to look at 4 o'clock. My time, it's let me see, it's like around 9 o'clock your time here. So that's the 9 o'clock candle got there. So that's 10 o'clock here, your time. But you have to do it in your time. You have to, you will have in your timing here, down here, your time frame, your time zone here. So that's a very good thing. The next thing you do is you can go in the bottom here, that the day, Monday, Tuesday, Wednesday, Thursday, Friday. So this pair trade the most on Wednesday, and it trade the best here. So Wednesday at 1600 hours, this is a very good pair to look at. Just using the statistics here from the track history of the pair. So do you have any questions to this? How you can time your trading just using you know, the history. Yeah, this is very good. It's a very good tool to use. Net, and you can go to volatility. You can just pick your basket. Just pick your basket due to this. You can also include the indexes. This is something I do when I look at a basket. I'll just add the index, GBP index. So I'll pull out all those here and put the index in, and I'll just select that, and I'll select the best time, and it'll be on my trading desk at those particular times when the trade will pop up on the screen, you know. So I'll not sit in this low equity hours here and low volume hours. We'll not sit here and trade it. So this is Asia Open, London Open, and New York here. So now we go down. That's a new day here. That was where I took some of the trades just overnight. I just entered here because it's still volatile. But because we have the rollover, the new day, you have to pay the swap here. You have to pay the swap. So we hope to be out of the trade on the same day. So just stay in this for a couple of hours, you know, stay in trade here for a couple of hours and close it out for profit. Or you can run it to the next day. But basically, guys, what you do, you go into this, the volatility, and you can just select here. Let me see if I can bring it up. Volatility. Let's see here. Well, this one should be online. You know, you can just go up here. You type in a couple of weeks, 2 weeks, for instance. Let's see. Okay, it's working. So now we have all of these guys here. Now we just press this one time. So right now, as we speak, the 2 last weeks, today, this pair has been the most volatile. You see? You can see. I'll just press this one. Okay, guys, I ask you now. To trade the GBP CAD, what day and what time will be the most volatile for this pair? Can you please press in the chat so I can just make a small test on you guys? When will this be the best time to trade for due to volatility? Yes, Monday, correct. And what time on Monday? Mondays? Yes, that's correct. So that's how you use this, and it's a very, very good tool based on statistic. Yes, exactly. You can use this tool when you pick the portfolio. It's a free tool to use, and you will be very accurate in your trading, and you will focus on the best one. So please use this and Net. It's a completely free tool to use. So this is how you pick the portfolio. You can have the next one in New Zealand. You know, this has something to do with Australia also. So let's see. And what can we see here? Still we have it in the US session. Still we have it on Mondays. So those are the most volatile. We're just speaking now most volatile. We're not speaking the highest probability trades. We're speaking the most when it's the most volatile, okay? So you still have to keep in mind when you're trading, Mondays are extremely dangerous days to trade because they set up the high and low of the week. So you should use this when you look for volatility. The next one is the Aussie. Going to Australia here. You see, for the last couple of weeks, it has also been the US session. This one has been most volatile. Let's just pick another one. Let's pick this one. And this is really what's so funny here now. So that is very, very late. Yeah, because actually another thing I like to say to you guys is they create volatility also to trap traders. So you have to use it in conjunction with our strategy. But you should look on a daily time frame. You should look like Wednesday when we have the midweek reversal, Tuesday, those 3 days here. In those, then you should select those 3 days here to trade it, looking at the time frame here. It is dangerous on the Monday because it's very volatile. Volatility is also very dangerous if you're on the wrong side of the trade. Guys, I will be coming back to you in 5 minutes time with all of the routines we were doing in the trading room. I will go into the details of what we're going to do to grow the account. So I'll be with you in 5 minutes time. Okay, see you in 5 minutes, guys.